Whatever the mind can conceive and believe, the mind can achieve.
It's the most powerful thing in the world, is your own brain. It can work for you or against you.
The only difference between successful people and not is just how they think. Rich people think different.
Understand this. If you can see it, you don't have to know how to get it. Your life will change. See this? This is energy too. If you get on the frequency this is on, you can't stop it coming.
In order to think and grow rich, it requires intention. But to think and grow broke, it only requires neglect.
Have you ever asked yourself what differentiates the winners from the masses? Well, I have. And I have found that the winners are aware of a certain place within. It's referred to as the higher self. And in this higher self, there's an image of perfection, which is forever attempting to express itself in a greater way. When the winner wants to turn their dreams into physical realities, they call on this higher self. And they set about and change the world, not just for themselves, but for everyone in it.
Rich people think different. So what I'm gonna put in your head today is a rich people concept, so you can get to understand it. The only difference between successful people and not is just how they think. Rich people think different. Quit letting people tell you you gotta get qualified in another program. You don't need another program to be successful. You need to change the way you think.
Strange thing about faith and fear, they both demand you believe something you can't see.
There is a method by which one may transmute failure into success, poverty into riches, sorrow into joy, fear into faith.
The way you think creates reality for yourself. There are other factors going on, so it's not everything, but you really can change your own reality based on the way that you think.
You attract not just what you fear, you attract what you feel, what you are, what you attract. What's on your mind.
It's like exactly. The law of physics. I don't know how anybody can disagree with that.
A power which is greater than poverty, greater than the lack of education, greater than all of your fears and superstitions combined. It is the power to take possession of your own mind and direct it to whatever ends you may desire.
You know, I always dreamed as a kid that, you know, it was possible to score 80 or 90 or 100. I always just like, you know, had a dream. You know, like sometimes you lay down in bed and you visualize things. And you just kind of, you know, that's at least how I would go to sleep. I'd lay down, I'd imagine playing for the Lakers, and I'd imagine what the uniforms look like. I'd imagine where we'd be playing, and, you know, the smell of the arena and all sorts of stuff. And I would see myself, you know, getting hot, you know, and score 10 straight points. And then, but in a dream, like, why would you ever interrupt that? Like, you're not going to have a dream and be like, okay, and then he misses his next 6. Like, it's not going to happen. So you just keep dreaming and dreaming and dreaming, and before I go to sleep, I'm like at 120 points, you know?
Be definite, believe, and act. When doubt creeps into your mind, remember that whatsoever a man believeth, that shall he also reap.
The person who's living in lack is waiting for their wealth to feel abundant. They're waiting for their success to feel empowered. They're waiting for their healing to feel gratitude. They're waiting for their new relationship to feel love. They're waiting for their mystical experience to feel awe. That's the Newtonian model of reality, of cause and effect. You know, waiting for that event to happen to take away this separation or lack. Nothing wrong with it. It's the way most people create. But what we've discovered is actually something else. The moment you feel gratitude, your healing begins. The moment you feel worthy and abundant, you're generating wealth.
What's going on? What's going on, folks? How are we doing tonight? Good evening. Calm week it's been.
You're going to have a mystical experience, and so that's cause and effect, right?
Where I shall introduce you to your greatest asset. And with this introduction, the master.
Let me know in the chat if you guys can hear me good. Yo, what's good? What's good? Somebody said they're watching this while my eyes are closing. I've been there. I know that. I've been there, done that. We've all been there. FOMC tomorrow. calm week. Calm week. Missed a move today on gold, but it is what it is. It happens. Might have missed 2 moves, 1 or 2. 1 trade this week. It's been a calm week so far. I've sent 1 trade this week, and I'm okay with that because it's FOMC, and I've been on a little bit of a win streak. So, but yeah, we just had 1 trade this week so far. Gold did provide some other opportunities. I swear, last night it was like almost 3 in the morning, and I saw price literally here, but my eyes were like half closed. I was passed out on the couch, and I look at price, and it would have been on like the 30 or 15 minute candle. Actually, it would have been, what time frame was it? I think it would have been like the 30. Yeah. There was a good trading opportunity yesterday on gold at 41.75. I had missed it. And we came back to 4,200. So gold right now, we're above $4,200. Starting the day out here. Trading above 42. You can see how this morning price was able to break above $4,200. And then we gradually just kind of pulled back to it, but then we had a fast move down. Ended up going below 4,200, reaching for way more liquidity, it looks like what the market did, and then breaks up. Ends up holding the price. Might have been a harder area to trade in if you first entered when it hit 4,200, because immediately a candle went down. And then it ended up breaking up and reclaiming that level, which is where gold can become difficult and hard when you may have a good setup or something clean. Like this would have been like a good area to be looking for entry, but probably a scenario where a stop loss would have gotten hit, right? Ended up reclaiming that level quickly after, and that's that volatility rate there is like the difference between New York session and maybe some other times of the day, or Tokyo session, late Tokyo session, London session, even sometimes, where the volatility can be more whipsaw like whipsaw type of movement. You could see this morning gold right around 8:30 is looking like a nice buy, potentially above 4,200, and then it dumps down. And within like an hour, it ends up coming back above the level. So at 8:30, it's here, drops down. 9:30, it's back up here. A lot of up and down there, but ends up holding 4,200 overall. Came from 41.75, and this is where I missed my trade last night because I just hesitated. I could have sent an entry out at 41.80. So I was watching price when it was like 41.80 after that candle rejected. And it kind of just happened too fast. I was too tired. Eyes were barely awake. And this right here, this candle rejected 41.75. And that simply is why it's good to just wait for your key levels, like your key price levels, and not always rush a trade, because you might be surprised or just see the simple fact that the market a lot of times comes to those key levels. Oh yeah, that one, the bottom one's 41.75. If you guys can see it, my camera might be in the way there. 41.75, tapped, comes up to 4,200, breaks above 4,200, continues. Now we're just kind of holding 4,200. And if you look at the price of gold right now, it's waiting for tomorrow, clearly. Going into tomorrow and after tomorrow, there's going to be volatility for sure. Silver exploded today. We see silver reaching like a record high price today of $60, just a little bit above $60. Silver is right now. Silver is having extreme bullish momentum right now. If you looked at the silver chart, basically kind of catching up to what gold, like, I mean, they both have been rallying, but gold was ahead of silver at one point a bit faster, but now silver is really, really fast. Extreme bullish movements happening on silver, which is another metal. Same with platinum. I think platinum had a pretty extreme move today. When you look at the metals, platinum here had a pretty extreme move up today, whereas gold, when we look at it, it's okay, yeah, move bullish, but maybe there's I kind of feel like there might be a big move on gold loading, potentially. Kind of feel like there might be, looking at silver's chart, just ripping up the last, like, it's been going up since Friday, pretty much. And it was pretty sideways here, and it broke out. Does silver pull back like to that area? Maybe, but like silver is just flying. $60 now. I don't know if any of you guys noticed that or saw that today, how it moved yesterday. Well, yesterday's candle. Today's candle just opened, right? So the market, well, today's candle, yeah, just opened. So the day's starting right now. Like 30 minutes ago. So there's no coincidence for these prices, to say the least. Like, and I think gold and silver at the prices they are signaling something like in the world. Obviously, we've been talking about this a lot on streams throughout the year of 2025. Silver being this high is pretty much tells you where maybe the state of the world is at. Like the last time we had this was in, you know, a run like this was like in the 80s, going into the 80s, and then 2008. So yeah, silver's on this huge run. Doesn't seem to be stopping at this point. Doesn't seem to be stopping at this point. Yeah, like where can gold go? We're going into 2026 soon. New trading year's around the corner, right? So like this year, gold, we obviously know, went on a crazy run. And I mean, a big driver is central banks have been a key driver in bullion's run, gold's run, with purchases led by China, Poland, Turkey, Kazakhstan, and many emerging markets, economies having large flows that needed to be reinvested. Yeah, so that's been a key driver, something we've talked about. I think a lot of you guys that have been following gold or keeping up with the markets know about that. China went on a 13-month buying streak. So yeah, central banks, led by that with its rally. And then just like, you know, you have all the uncertainty in the world with the tariffs, the trade wars. We're going to look at some stuff here, but this year, for example, wars, conflicts, crises, attacks, inflation, slow economic growth, geopolitical tensions, interest rates being lowered, Donald Trump with his tariffs, trade wars, central banks buying gold. All that stuff combined, you know, it's hard to just say one reason why gold's going. Like we got rate cuts tomorrow, obviously. It's like, okay, that's just like, that's one thing as to a whole broader outlook as to why gold has moved the way it has, and even silver. When we look at silver's chart right now, exploding $60. Silver since COVID, like both of them have been going up since COVID-19, which was here. Like COVID-19 crashed the market here. That was COVID-19. Ever since then, like COVID-19 was the bottom for everything. Literally, silver's bottom was COVID-19 when everything was crashing like crazy. Yeah, I got Discord and a Telegram. You can, if you check the description, that should be in the links in the description. Oh, I'm getting phone calls. Oh, snap. Oh, snap. Oh. Boom. So yeah, banks, like we got gold prices seen topping $5,000 by end of 2026. JP Morgan Private says. Senior commodity strategist here, guy from Bloomberg Intelligence, talking probably about some of the same stuff I just said, right? Like
that energy. 3,000 the more you draw that tariff announcements, which perhaps
metal is having a moment. Not this kind though, sadly.
Gold hits another record.
Spot gold prices have climbed above $4,000 an ounce for the first time.
The key word is scared.
During times of economic and political and financial turbulence, you buy the dollar, you buy US treasuries, you seek safety.
Not so much now. Now you buy gold.
What we're seeing at the moment, but it's not just dollars. Chinese mining company Xauusd Gold recently raised $3.2 billion in one of the year's biggest IPOs. But it's not just a gold rally. Look at silver. In October, it reached its highest price per ounce in more than 4 decades.
Oh, I gotta get my charger.
It is a warning sign that people are very anxious.
Gold is the ultimate safe haven asset, a heart rate monitor, if you will, the health of the global financial system.
And because of that, when you see a spike in the gold price, your first question should really be what's gone wrong.
Gold is the ultimate precious metal. It's been around since the beginning of time. Gold has seen it all and has survived through it all, and it probably will continue to do so.
Because it's reliable, easy to trade, and high value, despite lacking the intrinsic utility of a semiconductor or a shipping container full of these things.
Gold has outperformed equities, it's outperformed almost every other asset class if you take your starting point at 2000.
It is the one asset that does very well when the typical parts of your portfolio go down.
It breached $1,000 during the global financial crisis, $2,000 during COVID, and $3,000 after the Trump administration's tariff announcements, which perhaps was a wake-up call.
The dollar for many, many years has been seen as the haven of the market because people trust the US government and they trust dollar assets.
Welcome to 2025.
The dollar is the single biggest decline in 6 months in 50 years. Gold is at record highs.
And here's what that looks like. This gold line, because why would it be any other color, shows how much the metal has increased in value since January. The green line shows the dollar's depreciation over the same period. That discrepancy reflects what's called the debasement trade.
It is the idea that faith and trust in the dollar is no longer what it once was, so you have investors looking at other assets.
People do that trade when they are losing their confidence in traditional government bonds and fiat currencies.
And in that situation, gold becomes quite appealing because there is no counterparty. It's just you and your gold.
It's independent from the government's influence as well.
Which is no longer something investors automatically say about the dollar or the US central bank.
So the Federal Reserve has long been seen as kind of a bulwark of global financial stability. It has cherished independence from the political system in the US. Now the pressure on the Fed from the White House and President Trump has thrown that whole dynamic into question.
Am I allowed to appoint myself at the Fed? I do a much better job than these people.
How sustainable is the Fed's position, given the position that President Trump is taking and given the pressure he's putting on the Fed to lower interest rates?
If the Fed is slashing interest rates all the time,
that makes gold more appealing because unlike cash, it doesn't actually obviously yield interest. And so when interest rates are lower, gold becomes relatively more appealing. But on the other hand, you have inflation that makes gold appealing as a hedge.
And inflation's back on investors' minds as Trump's tariffs risk driving prices higher around the world.
So that's kind of a heads I win, tails you lose scenario for gold.
Over the summer, the dollar fell to its weakest level in more than 3 years.
While there are different views on what's behind that weakness, the takeaway is that the US isn't seen as the trusted ally it once was.
All right, I think we all heard enough. Need I say more? But yeah, I think you guys get the point and heard enough of
gold
that.
In the world, really gold is at China. But
a quarter.
Particle gold.
So yeah, this too. Most banks and analysts see gold rising 10 to 20% in 2026 for the same reasons that it rose in 2025. So it's nothing new as to why it's probably going to go up in 2026. But most people, basically, with all that being said, are seeing gold rising in 2026 pretty much for the same reasons again that it rose in 2025. Even here, these are some of the bank. This is like more. These are some of the major banks, brokerages, agencies here, like Morgan Stanley, Citi Research, J.P. Morgan, HSBC, Bank of America. I don't know all of these, but like Standard Chartered, Goldman Sachs, UBS. Price targets. Most of them have like price targets around like 4,500, 44, 45. Price targets. You could see this. You could take a screenshot or something. And this is all from like October. Forecast as of October 31st. All these. Last week it was this one here. I saw this on Bloomberg, Goldman Sachs, like 2 weeks ago, November 26th. So the question is, so that's that. That's one side of information. And the question is it going to go up in 2026? Possibly, right? That's like one side of all the information as to like looking at the chart, doing analysis. We got a lot of market research. We got a lot of fundamentals here, macroeconomics and stuff, like geopolitical stuff. And like even like this is an older one here. This is talking about will gold go up 4,026. This is from June, and like it's exceeded a lot of these old ones that we used to look at. So yeah, it's definitely an interesting chart to be paying attention to, probably in the first half of 2026 with gold. What's going on, buddy?
Fixing the shot.
What's going on, bud? Here you go. There's my phone. The laptop's cooked. So what's maybe the big trade loading? Like I just went over one part of it, right? And we just talked about one part of it. Everything that happened in 2025 that made gold go up, same reasons it'll probably go up in 2026 or potentially go up in 2026, all right? Oh yeah, just ordering a little something to the place here. Agree and continue. Bang. So when we look at this chart here, January, February, we're going into that season soon. It's December, soon it's going to be holidays, Christmas time, everybody spends time with their family and stuff, you know. So we're coming to that finish of the year here. So January is right around the corner, as we all know. And when we look at this chart, gold futures seasonality, this is called a seasonal chart. So seasonal chart gives us a data and information in a certain period of time. So it measures it in, for example, this chart is a 20-year range. So it shows us all the months, like how price has performed on average, bullish, bearish, or has it gained or has it lost. Shows us the average gain basically over months, monthly averages you can see here. So it's measuring the monthly average for gold over the past 20 years. You could look this kind of stuff up online, like seasonal charts, seasonal tendencies, right? And do more research on it and probably find more information out there. This is a website a lot of people might be familiar with here on the stream, or maybe something some of you guys have seen before. You can even do this with forex pairs and currencies. Right now we're on gold, for example. We're on gold, for example. So gold, historically, if we actually backtest the chart, kind of go back and look at what it's done in the past year by year, usually when we backtest stuff, we're looking at weeks or like what happened last week or last month or, you know, the past month. But with this type of information or this type of like strategy planning, you could go back to years, look back at the years on how price has performed. So to give you an idea of the trade that could be building up for gold, we have to go back to the last couple of years and pretty much just start, right, from, we're going to go back to 2025, January here. And we got the beginning of 2025 marked with the red line. Now I'm going to put another line pretty much at like April, before May. Like if you look at last year, I mean this year, sorry. This year, you could see how we had a huge, we already know this we already know. right? Between January and April. January and April, we had this. Pretty much before May. All right. We can go back 2 years ago. We're going to do the past 2 years really quick, and then we'll go back to other years, just so we can see like a closer example and get all the information about quickly. January, that's January right there. Bam. January, we're going to mark again January to April, basically around the same time, when the market pretty much peaked, which was like here. So where the market pretty much peaked, or even like a little bit over, right? So last 2 years, January to April, gold has actually perfectly like had the pattern, like it's followed it like the last 2 years. In the same time of the year, the same season, the same phase, you can see like literally, so January, April, you go back the last 2 years and see how this has performed, right, on the chart. So by all means, I'm not trying to get you guys excited here. There's a lot of planning and time that needs to go into this if there's going to be a big trade or a potential uptrend coming on gold. It's not just like, no, it's not just like buy in January and hold and it's just going to go up, up, up forever. Might be a little harder than that. Why are we talking about past history? Because we're thinking about how we can line up for the future, right? That's what we're doing here, right? There's a big trade loading and we're talking about it, right? That's why we're looking at history. If I have a trade, I'll send it out. But if I'm getting like, otherwise, like I'm not here to waste your guys' time. I don't have any trades right now. So wait, let me do what I want to do first. Stay patient. All right? Because in a couple of months from now, if this happens, you want to be prepared. You don't want to be like, we're preparing for the future. That's what we do as investors, right? We're preparing for something that could potentially be coming, right? So the analysis, in order for me to do the analysis, one thing to understand is I got to show you guys examples of what's already happened, right? This is analysis, right? Because there's more stuff that's going to go into this. So calm your keisters, fam. Calm your keisters. So between January and April, price has usually gone up on gold. This is usually when it can have a phase of bullish price action, a trend created, right? And these are the times where you can get the most out of your trading, is when there's a trend. When you have a strong trend intact is when you're going to get the most out of your trading, where the craziest flips are going to happen. Like some of my students were able to take I remember when gold last trended, some of my students were able to take like small accounts, I'll show you, to very, very large increase, like $600 to $20,000, no cap. Let me find some crazy examples from just this year where we had some crazy money made, like $450 to $7,200. There's gonna be some crazy stuff. 1K to 4.5K in 5 days. I remember he ended up flipping it even more. 2 days flip from $1,000 to $10,000. Made 15x on my account the first day. This like 32K payout in the first month. This person put, I think they deposited $8,000. Oh wait, different language. That's in Polish or something, or German. But they made 32K. When you have those times where the market is trending like that, it's where you can make the most. Like some of my students had crazy flips, and this isn't even Discord too. And Discord is where people are posting the most. There are some crazy flips that we were able to achieve. I'm trying to find one where someone went from like $600 to. We had 3 students actually who went from $600. One went from $600 to 21K. We had another student who went from $650 to 28K. And we had another one who went from 600 to 23,000. It was pretty crazy times when the markets was making these trends. We like the results that are achievable in times like that are you can make the most out of 30 to 60 days. So that's why I'm preparing for this too and talking about it, because I'm trying to make the most out of it, you know, with how I'm at my level and what I'm trying to do. Because it could be around the corner. And if you look at after April, the market usually consolidates. So same pattern happened 2 times in a row. It's pretty much 2 phases where you could get a bullish move in the year. And that could be the beginning of the year or towards the end of the year. It's pretty much like 2 phases where you could get bullish movement in the year. So hopefully you guys are understanding this chart. So we're pretty much like doing what last year did right now. If you look at the one little spot I didn't mark and left open, that's here. Right here. So that was last year around this time. December, like between when the market made its peak, which last year it made its peak October 31st. This year it made its peak October 22nd. So this little area that I left kind of blank here is pretty much like where we are now in price. I'll make it red. All right, which is pretty much like where we are right now. So gold just went on a run. And when it started dropping, everybody started flipping bearish. And now it's just comfortably traded above $4,000 for 2 months now. We've been trading kind of comfortably above 4K. So November's low is going to be important, which is around $4,000. November's low, the 4K area, 4,000 USD. So after January, really like directional bias with gold is going to be bullish long term. So how I'm going to trade is just like I'm going to plan to trade a certain way with some of my trades and just hold them for my sake, right? But you could plan going into literally this year of how you're going to approach the market with some trades. I'm going to let some for example, I'm going to let some winners run longer. If I have buys and I'm thinking long term the market could still go up, I'm going to let some winners run longer. But it's probably not just going to be as easy as clicking buy in January. You'll probably need to look for multiple trades or try to have multiple swings. I'm wondering if November's low, so November's low is important, if that's ever going to come back to retest. Now, analysis, everyone's telling me to do analysis, but same analysis I did 4 days ago, we're going to talk about tonight. Nothing's really changed from what I talked about last week. 4,200, we're still chilling above 4,200. If you were on last week's streams with me, guys, anyone that was on last week would have remembered I was talking about this high. So when you actually look at the market, like it's just waiting for FOMC tomorrow. So FOMC's tomorrow, and I've been trading for over 10 years. I don't come on here to predict like, yo guys, FOMC is going to do this. Personally, FOMC isn't like a week that I trade that much. I wait for after FOMC. I don't really care too much about FOMC week. You're going to hear me say that every single FOMC. Every single week that FOMC is around. You might not see me be as active because that's just a part of my trading plan. My trading plan, right? My trading plan, how I trade, all right? So gold isn't really doing much right now. There's some good movements, but daily right now is just chopping around, waiting for tomorrow, right? Waiting for FOMC tomorrow to move. Right. Anyone that was on last week, we talked about this. We literally talked about this high last week. Anybody that was on last week, right here. And price has been chilling above that high. Pretty much the last days. All last week, these days. And if you're on yesterday I did a quick analysis and I told you guys, I don't know what time I streamed. I think I streamed over here, and I told you guys if gold breaks above, literally, gold did what I said yesterday. Go watch yesterday's stream, guys. We were here. We were here yesterday. I don't know. I think when I went live in the afternoon, and I said, if gold breaks above here, I'll look for a retest of 4,200. Go watch yesterday's stream, and you'll see me talk exactly about that. I said if you're looking for buys, and I told you guys I told you guys basically like what happened here is what I'm looking for. If it gets above 4,200. That was yesterday. If anybody was here yesterday, I did talk about one analysis yesterday and one thing that I would look for gold on yesterday. And it ended up happening. So like, because that made sense to me. If it breaks above there, then we might get a retest of 4,200. So if anybody was on stream yesterday with me, I did mention that. We were looking left. If you were here yesterday, we were looking at these highs here and saying, okay, if we get that move above, it will probably try to make that same move down. That was yesterday's discussion. We did talk about that. See, price has just been consolidated. It's literally waiting for FOMC. Like, this has been like a whole week of just like sideways pretty much. FOMC is tomorrow in the afternoon, so like I don't know. I don't really trade FOMC like that so much anymore. I don't really care to. I just focus on my strategy on regular days, regular weeks. So I don't know, for now it's just like still holding that daily high. Like we're literally just holding this whole area, which if you go on the daily, is a high here. That daily high could potentially hold. Like it's just been literally for the last days just sitting above that daily high when you look at the daily candles. So like it's not like it's done a whole lot. There's been some good moves in here. But what price is pretty much telling me is that like it's like how it's moving right now is like there's just a lot of liquidity being built up right now. You have the top, and now you have all this support here. You definitely have more people buying probably than selling, I would think. There's a lot of liquidity being built up for tomorrow's news that is going to make this shaky. Like not like for me, like news isn't like FOMC week isn't like usually something that I find an edge over. It's just a news day. The market's going to move. It's not a setup. Like it's not a trade setup for me. Right, a trade setup is a strategy different than, okay, the news is coming out tomorrow. We know the market's going to move. Is it going to go up or is it going to go down? Me, I like looking for setups, and that's why I just been trading how I've been trading. Just strategy, focusing on the strategy, the setup, when it's there. So with this price action, it's like, okay, I'd rather wait this out and see which way the market wants to go first. If it wasn't FOMC tomorrow, I'd be thinking this is just going to push up, to be honest. If it wasn't FOMC tomorrow, I would just be thinking we're going to continue more so off of that resistance. To the left there. Which I remember last week I was trying to look for buys. Like last week I was looking for buys off of that. Like last week I caught some buys off of that, like this, doing the same analysis from last week. So it's like, that's what I mean, not much has changed since last week, because I remember last week talking about this high, and we were probably able to use it a few times last week with some of the trades I might have caught and sent out. So for now, like look at the daily, it's chopping around. The reason it's like this is because tomorrow's FOMC. Today was a bullish candlestick that closed, or sorry, yesterday's candle. Just make sure. Yeah, we're on Wednesday's candle for the market. Yesterday was a bullish candle, so we do have a bullish close. If I were to find a trade, I would want it before FOMC. Like I wouldn't want to be trading too close to FOMC or even too much afterwards. You can see the daily candlestick is pretty much just bullish there, ranging. I'm telling you, it's waiting for tomorrow. That's why gold, if you've been looking at gold the last, like, see how sideways it is now? Makes sense. So now it's just going back and forth. FOMC tomorrow. So it's just been chopping around. The daily, like I see the daily. I don't really see a trade on the 4 hour. I literally see like this, like maybe this pulls down a bit today. Like I don't see anything on the 4 hour right now. Like the daily could potentially hold. Like a little pullback on today's candle, come down, and today could potentially push up. If we get a bit of a pullback into yesterday's candle. We're holding 4,200, which is a psychological level. Like futures price for gold is 4,240. Yeah. Yeah, for buys, like it's 4,200 got reclaimed again, so maybe trying to see if you get an entry back around 4,200 if the market even offers that. I would say before tomorrow, like before FOMC's news would be more ideal to try to look for buy setups if there's good pullbacks before the news comes out tomorrow. I don't know. Only time frame that looks clear to me right now is the daily. So that's really it. Like the daily is the only time frame that looks super clear. Line chart helps. Maybe see what I'm seeing a bit more clear if you're looking at the line chart now. And what, 1, 2, 3, 4, 5, 6, 7 days now. So yeah, 7 days just kind of sitting above here. If FOMC is crazy bullish, then like if gold goes bullish after FOMC, it could go to like 3,400 realistically. Just depends on how this develops. Like if this is like a breakout forming, then yeah, it could go far. If this is like a wedge pattern, like a breakout, you could see how price has just been sideways. To me, the only reason I think like bullish for this too, like if this high wasn't here, it'd be different. I don't know, but FOMC tomorrow, I'm gonna stream more. I haven't been streaming much this week because like I said, it's just been so far it's 1-0 on the week. Sent one good trade yesterday. Today didn't stream or anything, so haven't been streaming much this week so far. Gonna be streaming more after FOMC. That's my rule. Like I put that rule at myself a few months ago. Like every trader should have rules for themselves, and my rule is when it's FOMC week, don't be on the charts as much. That's my rule for me. And mind you, like I didn't come up with that rule a year ago too. Like mind you, it didn't take me like I've been trading for 10 years, over 10 years. So it's like, it's a rule I have for a reason. So like every trader, you should have your own, like, I don't know, like the day that traders trade the most is FOMC and NFP. So most traders trade the most on NFP and FOMC days because they know the market's going to move, right? That usually means you don't have like an actual strategy or plan. Like if you use news days out of desperation to try to make profit or trying to make money. Like NFP and FOMC are like the most high activity days in the market. They bring in the most volume, the most activity those days. And for me, they're the days that I'm like, okay, I don't need to trade. I don't have to force the market. So FOMC week, I'm not on the charts as much. That's just one of my rules. Psychology kind of off. I don't feel like I do on a normal week, and that's just part of trading, right? Like I know traders who don't trade on NFP. So for me, I'm not one of those traders that's like, oh my gosh, it's FOMC. What are we gonna do? I gotta listen to Jerome Powell speak for 40 minutes and then be like, what the heck did he just say? I don't always do that. Depending on the stance I have of the market too, like where my energy's at with the market, but I've just been consistent with my strategy, so that's all I'm focused on, is just when my strategy is clear. Yeah, maybe we can hold this bottom range. Like, I would, like, personally, like, again, like yesterday I showed you guys something. Today I'm showing you guys something. So yesterday, if you go look at what I said yesterday, it happened. Only thing like I like from what I can see on the chart is what I'm showing you right now. Like, everything I've broken down from the daily. You know, there's not much to look at, but again, patience is key. Daily high, holding. After FOMC, like, after FOMC, I'll be streaming for the rest of the week, seeing how the charts flow. I mean, I've won 5 trades in a row, so I'm just kind of chilling. Like, I won 5 trades in a row. I'm not eager to find another trade, right? I won 5 in a row. The next trade could come Thursday. That you know, that's not a worry for me. Patience is key. Patience waiting for the setup. That's why most traders fail, because they don't have, 1, the patience to wait for trades, and 2, the discipline to stop trading. So it's like you either adapt patience, or then if you don't adapt patience, then you'll lack discipline, and that might keep you just over trading, taking more trades. So you have to have the patience to wait for the chart to give you a trend. It might take days for a trend to form. You have to have the patience to sometimes wait days for a trend to form. Days to wait for that setup to appear. I'm telling you guys, from my experience, it's better to trade after FOMC. But you could still find some moves, London session before New York session. So you could still catch some moves and find some potential opportunities, like, before New York session even comes. Did we retest this area down here? Yeah, we did. I don't know. Right now, when is Powell? He's done, I think, in May. I think his term is done in like May or something. The big gold trade, like, I know this time of the year too, and like, this is maybe the last week. We have the next week to maybe catch a couple trades. I told you guys coming into December to just have a less is more attitude, quality over quantity. All the trades I've taken, I've sent them out as signals in December. So like December 1st is right here. December 30th we had a trade. That one hit TP. So there's the day before, the night before December 1st. So it's technically December 1st. December 30th is technically December, for me, December 1st for the market. So December 1st starts here. So I've had 1, 2, 3, 4, 5, 6, 7, 8. I think 8 or 9, 8, 9. Yeah, these are all the trades I've had literally since December 1st. Now, I don't trade currency pairs. This is where you guys got to sometimes relax and realize, like, this is a good number of trades to be taking. Some of you guys want 8 trades a day. Some of you guys want like trades all the time. And one trader takes as many trades as they can spot, their ability. They look for setups, right? So this is a good amount of trades to be taking in the month, especially December, like looking just for quality over quantity. If there's a clear setup there, I'm looking to take it. So what I like to do is jump on the charts more than 1 time per day. I don't like to go to the charts and be like, okay, I'm buying here if it gets here. Like, I don't go to the charts and be like, all right, guys, if it goes here, this. I like to jump on the charts enough throughout the day where if there's a setup there, I can spot it. Or I can do my analysis. Like here, I don't see a setup. There's nothing I can really be like, oh yeah, we got this trade set up. I can kind of get an idea and be like, oh yeah, maybe we come down to here and test the lows, but no, I'm not sitting now. So I like to pace my time out through the day. I don't just go to the charts and sit there for 8 hours straight or 4 hours straight or 6 hours straight. I spread my time out through different sessions of the day. I look at the market like right now when it opens, for instance. When the market first opens, I look at it. And then I might look at it in a couple more hours, and then in London session, and then in New York session. And like I'll spread my time out as to how many times I'm actually looking at the chart. Instead of just going to the chart and doing one analysis, like, okay, you know, top-down analysis. Most traders go to the chart and they do top-down analysis. They go, okay, what's the daily looking like? Okay, what's the 4 hour looking like? Okay, what's the 1 hour looking like? I'll do that more than once in the day at different times, right? I'll do it in London session, I'll do it in Tokyo session, I'll do it in New York session. I'm full-time doing this, so I have the time to. You might be asking, how do you do it? But it's literally my life. It's literally my job doing this full-time. So I'll pace, like, I won't sit there for 4 hours straight all the time looking for a trade. I'll maybe do an hour or two over here at one time, maybe late at night, maybe an hour or two in London, maybe an hour or two in New York. Like I'll pace some time out. So if I'm spending 6 hours in the day, right? And like there's a lot of traders out there that say they spend 20 minutes a day and boom, they're profitable. Like make it look like it's, oh, you just spend 20 minutes a day and then you're going to go to the gym and you're going to carry on your life and it's just going to be that easy. Not so much. I don't think so. Like you have to actually put hours into this every day to sometimes even just find a setup if you're looking for a setup, because the market doesn't always arrive on your schedule. If you're a pure scalper and you're just going into New York session, you're going to trade for 20 minutes, then yeah, maybe it's that, win or lose, continue your day. But with how I like to look for setups, sometimes I gotta like, with how I look for setups, or just even any trader, like you have to put some time into it. Like you're not gonna always pull up your laptop and boom, there's a setup right there. Like you may have to sit there for an hour or two before it's like you see something or you don't. So I like to pace the time out. Like I said, if I'm sitting there for 6 hours in a day, I'm not sitting right here for the next 6 hours. I might sit here for, as again, we've been on for what, an hour? So I might sit here for an hour or two. And then maybe London session, the New York session. So I'm able to, in the day, be more reactive to what's happening and happened, not, oh, like there's a difference between maybe seeing something an hour later versus seeing it the next day, right? So I'm more reactive to what happened before and now, right, throughout the day. Like if I go to the charts in 4 hours from now, I'm going to be able to see what's happened in the last 4 hours more clearly than going to the charts like 12 hours from now and looking at the last 12 hours, or going tomorrow and looking at the last day. So I like to have repetitive repetition with that, with some reps of showing up like here, there, and there, so I can spread myself out on the chart. That's how I'm at different times able to spot maybe some setups. Yeah, the chart is definitely, what's the dollar done? Dollar's pushing up. The chart on gold looks choppy to me. Choppy kind of price action here. It's choppy. Not really my favorite. But we'll see. We'll see how it looks tomorrow. Like, there's no rush in finding trades. Trades don't, like the trades find you. Oh, what the heck? It's here. Yeah, I got the door. Someone's at the door? Who's at the door? Oh, yeah. Oh, yeah. Oh, that's for me. Where's my coat? Let me see. Is that Uber Eats? Uber Eats? Yeah. Yeah, so here we go. Yep. Is there a pin? Let me see if there's a pin. If he needs a pin. Oh, yeah.
Con questa villa.
Che sentono se parli via così.
Yeah, my passport expired yesterday. Well, folks, is anyone still here? Throwing a party tonight. Throwing a party tonight. Pull up. Pull up. Who's pulling up? I just tried to order some bottles of tequila and I realized my ID's expired. Fail. Yo, give it. Yo, we got that. Oh, there we go. Look at that. Oh, yo, the pin's 8795 for the
8795.
Yeah, for the code Uber Eats fucking code shit. All right, folks. Yo, get me a beer. Yo, get me a beer, yo. I'm starting early tonight. I'm kidding. I'm not kidding. I'm kidding, but I'm not kidding. These guys don't hear me. Fucking guys, man. Daily candle, bullish. Daily candle, daily. I think that's the only thing that's keeping me on this chart is the way the daily candle looks. Maybe pull back, continuation. You know, like break and retest. Daily candle pulls back.
You want one? I got you one?
No. I'll get it myself. You know?
No, I didn't get it. I got it myself. I did myself. No, I didn't get it. I do it myself. No, I asked you. You didn't get it.
I'm just, trying to stream here. Like, some people, man. Buddy, I got some friends coming over later, so it's a big place. Bro, this guy's a fucking hit.
I was getting you the other thing.
Like, were you bored yesterday or what?
No, I was getting you the other thing. I was looking for a glass to get you the other thing.
Damn, man. See? So I had to get my own still. That's it. Yeah, so nothing much to look at gold on right now other than the daily, how the daily's looking. This 4 hour looks like it's probably gonna drop, this 4 hour candle. Yeah. This 4 hour candle is not looking too hot at the moment when we zoom in on the 4 hour here. Looking like we're getting a lot of rejection here on the 4 hour candlestick right now, all in here. These wicks, small body candlesticks, like we're probably gonna come back down to retest 4,200. Getting some wick rejection. Let's see what the 1 hour looks like. Consolidating up here, chopping around, yeah. 4 hour could potentially drop. If you're looking for buys, which is usually what I've just been looking for this month, they've been clean. Buys have been clean all year for me. Probably going to come down to that 4,200, maybe 4,190 area. Revisit. Buddy. What's silver doing? Silver had a, yeah. Silver's just been green candles. While gold did this, so you see gold's movement like here, silver went like this. Yeah, it was a little moment. Yo, Leo is sleeping on that beer.
Chad said that.
Yeah, fucking Leo, man. Camera, stick to the fucking.
Like, I was thinking about the fact.
Stick to the camera, man. Stick to the camera, man. Stick to the camera, man. How do you think crypto reacts? Do I use 1 hour? Yeah, I use the 1 hour. I use the 4 hour. I use a lot of time frames, a conjunction of time frames. It depends on like the setup. Like it's the same setup, same strategy for whatever time frame. Right? Same strategy, same setup. Like I either trade reversals, like support and resistance, or I'm looking for a trade within the trend. And like for the last 2 weeks, I've been highlighting so much. I've done so many trade breakdowns. I've talked about the same thing a lot over and over again about the types of trades I look for. I've shown live examples. I've gone over all the signals that I've sent every stream. up into this point that it's usually the same setup, same type of break and retest with the trend that I'm looking for. So right now there's no like clear setup. For me, like gold would have to break above here too. Like a clear setup would be if like gold broke above here, then I would look for a pullback and possibly like a continuation from there. Like I don't trade everything and everything. I'm looking for my strategy, my setups, like setups. I'm looking to identify a trade setup, not okay, prices here, could do this, it has a, no, if there's not a clear picture setup that I can visually see, then it's like, let me just wait. Or if there's not a trend, then let me just wait. So I'm not always trying to predict every time I go to the chart, like where prices are going to go to and such. I'm full time. I go to the, like, look how much I stream. I'm full time. I go to the charts enough that I see setups with the amount of times I just go to the charts. So I'm not always trying to look at different time frames and be okay, this is this. It's if there's something clear on the chart, it'll usually be there. The last clearest thing for me was last night. I missed an entry, and that was at 41.75. So last night was like probably would have been something clear to see if you're on the charts. I was just falling asleep, like passing out, and I missed this trade right here. I missed buying right here. So there's a trade there. 4,200 break. If I was on the charts, I would have taken a buy there too. Might have went in a drawdown, and then it came back. And above this area, there's a lot of resistance here, so it would need to like break this area. There's a lot of resistance here, so if it could break above, then it's like a good retest zone. If price pulls back to 4,200 or lower, maybe something can happen around there, some rejection to watch for. I trade all time frames. I trade 5-minute time frame. I trade the 5-minute chart, the 15-minute chart. One of the last trades I sent was right here based on the 5-minute. One of the last trades that I talked about was this right here. Was that the 32? No, wait, sorry, it was right here. This one. That was from Friday, one of the last trades. Man, that's off of a this one right here. Nope, that was yesterday. Where's Friday? This one right here. That was, again, same style of setup that I want to try to see, right? You got to understand, I trade one strategy. Kind of two. One, maybe kind of two strategies. But it just depends on the time frame you can visibly see it on. Like, I can trade my strategy on any time frame. This is on a 5-minute chart. If you weren't looking at a 5-minute chart, you wouldn't have found that. It wouldn't look clear there. You wouldn't have been able to really find that setup. So this is one of the last trades I sent right here. Right here. Exact entry, right here. Stop loss, take profit. That was on Friday at 9:03 in the morning. I had sent that trade at 9:03. That was when the market was right here. That's where the market was there when I sent the trade. So it took the market making that resistance. I sent the trade on this candlestick. Sorry. This one. That's where I sent the trade. Now the entry was here. So I came down eventually. The target was up here. Forget exactly where the stop. I think stop loss was like here. I think it was 44. I forget. I gotta look. That right there was one of the last trades I sent. Now, I didn't plan that trade the night before. I just went to the chart and I was able to identify it, spot it. That was on a 5-minute chart. So I don't always just trade one time frame. It depends on what I can see, what the market is doing too, because this was clear to me. This had a uptrend already, like this was uptrending. It had a nice resistance there. And I was basically going with the trend. So the first step in finding a trade too, like for me, where I've had the best consistency in results, is identifying trend. My hands are like tight here. Let me move this thing. Identifying a trend, a strong bias, being able to feel like the momentum of the market, where the market is pulling towards. So first step is literally identifying a trend. Because I take the same types of setups. They're usually something that's kind of just going with the trend, or something that's getting ready to reverse. So identify a break and retest in the trend. Look for a break and retest in the trend. This can be any time frame though. This is probably one of the easiest strategies. In trading, you have all these different strategies and stuff. If you just focus on one strategy, it's not always going to be there. And it's good to just focus on one strategy. It's better and good to just focus on one strategy that you know you're good at, that you know works for you. You know when it's there, you can spot it, and you know it's clean. Like you have confidence with it. There's plenty of other strategies you can use, but then you take more trades, you see more things. Like if you have one strategy, it's not always going to be there every single time you open the chart, because it's just one strategy, right? And there's so many candles, so much price movements in the market. So one of the last trades I sent was literally just a simple trade going with the trend, but it was on the 5-minute. So someone asked if I trade on the hourly. Yeah, I'll look at the hourly candle, and based on even what other time frames are doing, I can gain a sentiment from that hourly candle if it's maybe setting up, or that hourly structure of the candles. But this trade here had nothing to do with the 1-hour chart for me. Like I spotted on a 5-minute and a 15-minute. This trade right here that I took, which was this. I'll show you how it looked right here. Right here. That had nothing to do with any other time frame other than maybe the charts that have the minutes, maybe the 15-minute, the 5-minute. You can see here, break and retest. If I'm going to go to a 4-hour, let me go to a 4-hour and try to see if we can find a trade that's similar to that on a 4-hour chart. Like looking at this same chart, like can we go to a 4-hour and find a break and retest in the trend? Right here. There you go. Now it's a 4-hour. We're not going to see 20 of them on this chart. We might see a couple, right? There's one right here. There's actually one before that right here. So like a break and retest in the trend. There's literally 4 that I can see on the 4-hour pretty much there. And maybe using this high with the wicks, those wicks did pull back. There was a bit of rejection there. But like, identify a trend. If you're looking for a setup, you first need a trend. Trends take time to form. Trends take chart time to form. Days even. It can take days for a trend to form. This is the part where traders lose patience or the discipline to just wait for that strategy. Here, you have one right here on the 4-hour. Bam, visible right there. Why? Because, well, look at the market. You know, the market's already pushing up here. You broke out. You made a higher high in price. Bam. So here, great trade. It's like in a trend, identifying like a trend, like a direction, like here. But remember that example I just showed you on the 5-minute? You can't even see that anymore. You don't even know where it is. That one that I just showed you on the 5-minute. That was way over here. Well, you got that right. There's one right there too on a 5-minute. But the one that I took, the signal I was showing you, was right here. If you go to a 4-hour, you can't even see those zones really that I just drew. It's not this. I drew those zones right there, where I'm circling. There's not, you can't even see them. So it's like on a 4-hour, you can see right here. There's the same trade setup here on a 4-hour. You can find those same types of trades on a 5-minute on gold when it's trending, especially through London towards New York. London towards New York. Like if you look at a 5-minute, you're actually going to see a lot of these types of smaller trends on gold that form on a 5-minute chart. That can just quickly go with the flow or some of that demand and volume that it has. It'll do this a lot on the 5-minute. So I'll catch a lot of these types of moves when there's a strong daily trend. If there's like a strong daily candle, a certain direction, I'll find a lot of these sort of inside of that trend. And it can be for a quick moment. They're not usually big, long trades. Like they're on a 5-minute chart. Like this is a 5-minute time frame. When you have an understanding of gold and when you show up consistently, the setups are there. That's what it is. Like when you show up to the same times consistently, the setups will be there. I don't know, for me on gold, before I wrap it up in a little bit, it's probably going to come back to 4,200 or like 4,190 area. It looks like the daily, like I said, yesterday's daily closed bullish more so to me. And I'm maybe thinking that this daily candle could try to pull back, like I said, to 4,200, maybe 4,190 area before rejecting. Creating some support here, like potentially creating more of a support on the daily. That's all I see for gold tonight, or maybe going into like tomorrow. Bum, 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 bum. FOMC. I don't get FOMC day. I don't get too excited. I mean, after 10 years, you guys will see. Once you've been trading for 10 years, maybe you'll be able to relate, or maybe not even as long as 10 years. Like, I don't get excited about FOMC. I used to when I remember maybe my first couple of years trading. Yeah, my first like 3 years. 4 years, I would get excited when there was news and want to trade it. What's the news going to do? Oh my gosh, news day. Everyone in their group chats would be like, today's the news. And I don't get too excited about the news anymore. I know a lot of traders do, but that, you know, when you've been trading for a long time, it kind of just filters out over time. And it's just more of a neutral effect. And that's kind of where your all-around trading should be, whether it's win or lose. You just want to try to have like a neutral effect when you're going into whatever day, whatever week, whatever month. You want to be neutral on any standpoint, even with news. Whether you trade the news or not, just be neutral with it. Go on my YouTube, watch one of the most popular videos. It's about news. It'll teach you a news strategy that you could use maybe going into tomorrow. All right, but that's a strategy that you got to do more in the moment. That's like not really a forecasting ahead of time strategy. If you go videos, popular, you watch that news strategy video. There's a good video there about the news. I think there's two, news strategy, 2 videos there. Watch that video. It'll give you maybe some preparation for tomorrow. That would be, I think if you're going to trade the news, that would be maybe one of the best ways to approach it.
At one point.
I would watch that video if you haven't seen it. Or even if you have, maybe rewatch it so you can kind of maybe get some forward thinking. I don't know, I'm seeing daily bullish yesterday's candle. Today maybe could be bullish too. Like we're probably going to try to retrace back into yesterday's daily candle, tap into it, hit it, maybe create a wick here to then try to push up, reject that area. We've seen a bit of rejection there so far. So we may try to retrace, like retract back into it. Maybe even form like a wick. You can see the last 2 days have wicks here rejecting that area. So I do see us potentially coming down into that area. That's all I see from a daily bias, but I'm going to wrap it up for the night. That's really going to be it. We're going to be on tomorrow. We're going to be on all through the rest of the week. I bet we'll find 2 setups after FOMC. I bet we'll find 2, like after FOMC, I bet we'll find 2 setups. Used to do news trading, got whacked a lot. Float stock, okay. Yeah, like I've done news trading. My biggest day with gold is on a news day. So I remember, I think it was funny enough, I think it was FOMC. But I like, I've had too many experiences where I trade so good leading up to a news week, and then I just have like a bad week with a news week, like FOMC. I've had too many experiences like that where it's like good trading, solid trading, regular weeks where there's no FOMC, where everybody's not asking what's FOMC going to do, or, FOMC predictions and this and that. And then the week goes under your expectations. Like usually FOMC weeks have gone like way below my expectations. So I've just been like wrong about the market usually on those weeks. And it's like usually just normal weeks where my expectations are high for something. Like it usually happens just on normal weeks where there's no FOMC week. So that's what I've just noticed about myself. So that's why I'm like, have some attitude towards FOMC, because fuck FOMC. There. Fucking FOMC. Like I think this year too. Like this year, this year. That's what I'm saying, because this year freaking FOMC was annoying for me this year. So it was just like, the last FOMC was actually like, if you go look at the news strategy video, the last FOMC was actually like literally news spike. Well, the second last, I think September 29th. So let's go to September's first. September, where's the September 17th? Not September 29th. September 17th, right here. There it is. That right there is literally the news strat. Like if you go to this video there, right there, that video under popular, this one, that's right there. That's usually what can happen. Like I would say more than it doesn't. This is pretty much how the news typically behaves. Because tomorrow you have the federal fund rates, and then FOMC press conference. So it's kind of like 2 moves that end up happening in that 30 minutes. Like you get the first move, which is usually like the fake out, or I like to call it temporary direction. I go over it in this video. In this video, I talk about it, and you'll even hear me say temporary direction.
That process, but that.
So I'm gonna cut my hair tomorrow.
Helped me overall.
I'm gonna go. So I gotta get a haircut right now. Bad. My hair's like bad right now. We talk about temporary direction in this one. This thing. A lot of you guys should remember this. So usually in like the beginning of the news, you get those big price pushes up or down. Like you'll usually create like a spike up or a spike down in the first minutes. Not every trader looks for this or knows or is considered aware of this. And a good example would be this. I go over really good examples in this training. This is actually, I remember this example. This was during the news. But look at after the news. During the news, after the news. So that's like that's the part you kind of want to avoid, maybe. Like, depends on if you got a good sense of where the liquidity is and where the market's most likely to take out liquidity. Some traders are really good at doing that, where the market could try to seek liquidity. Some traders are better at doing that than others. So with news trading too, it comes down to the person too. The person, some people might have more unique abilities than others. Speed, like things that are important with news is like timing, speed, like maybe not even not hesitating, like being quick, like if you're really quick, if you're really slow or hesitant, you hesitate and like news trading might not be the environment. If you're a fast thinker, quick at making decisions, quick thinker, quick decision maker, maybe even like that fast-paced volatility, a little bit more risky, go watch that video. That could give you a good rundown of what could happen tomorrow on one of the last FOMCs. It happened right here. Price would have spiked up in minutes, but then it just completely went down. Maybe we do something like that. We could spike down first, then go up, like one way or the other. But like I said, daily candle, already went over that. I want to see if it pulls back. That's kind of like, if I'm looking for anything today, that's the only thing that I see clear right now. Like that would be okay. Yeah, news trading doesn't always, like, I know traders that when it's NFP, they say, you know what, I'm not going to trade today. And it's good to have days you can stay out of the market, because trading doesn't need to be something that you do every single day. News environments might not give you that edge over just a normal day. Like a normal day in the market, that's just maybe because FOMC happens 8 times per year. So for me, at least, I find like sometimes my psychology is off. Like I'm overthinking it. The market does not go meet my expectations. So there was 1 week. Let me find it. Was it June? Price didn't do like anything. I think it was. If I look at it, I'll know. If I see it, I'll know. Yeah, here it is. This was an FOMC week here. And it was like a stupid week. Like literally, like I was trying to I was holding buys at 75. I remember it was, yep. There's 75. Yep. I literally remember this. Remember situations like this. This is one of the reasons why from this year I'm like, you know what? After this, I think I was like, you know what? Because before this, I know I might have had like another bad FOMC or probably a few experiences. I remember this week specifically, and I was just cheesed after this week. Like, bruh, it was like I remember looking for buys, and that was the week. Like the week was just like, I remember that. And it was annoying. It was kind of an annoying week. I blamed it on FOMC week, basically. Yeah. That's funny. 4,200. This guy's like whispering himself. Yeah, if you look at 4,200, you can see a good amount of action around there. Breaks, retests. In the short term, we might come back to retest that or lower. Like I said, 4,200 or 4,190 area. That's why you spend time on the charts. This is why I don't always jump right into analysis when I get on the charts, because it's good to spend some time. I like to spend some time, watch the charts move. 4,200's had a lot of action. Anytime it gets above 4,200, it usually tries to pull back to it. You can notice if you kind of look to the left, you can see multiple pullbacks to 4,200 and then some reactions off of it. Like here, we break above, we pull back to it. Here, we come back to it. There's a lot of pullbacks to it. A lot of pullbacks, a lot of pullbacks, a lot of pullbacks around 4,200. So we might get a pullback to 4,200 or even lower, like I said, 4,200, 4,190. But yeah, that's going to be it for me for the night, guys. Going to wrap this session up. Throwing a party tonight. Kidding. Damn, is that AI? It's a bread cat. It's a bread cat. But that's it for gold tonight, guys. 4,200. You know, if the bulls are going to maintain that level, potentially. If not, it's kind of just waiting for after FOMC tomorrow and just going back to, okay, regular trading week. That's why gold has pretty much been on this like sideways like slope here. I was about to say slideways. It's been pretty much like sideways, like correcting. You can see the last days because it's waiting for FOMC. But I'll see everybody next stream. Not much more to talk about here tonight. 4,200, maybe that holds. If it doesn't, then we'll see. We'll see what the markets look like after FOMC.